Hello everyone, this is Crypto BitLaw, here with another blockchain legal brief, and today we're going to discuss how some of the biggest players in the crypto industry are speaking out against proposed SEC regulations. But before we dive in, please, if you enjoy this content, hit that like button and subscribe to our channel. And with that said, let's jump right on in. Alright, so we'll start here with this CoinDesk article that's entitled, Crypto Proponents Fear SEC Backdoor Regulations on Exchanges and Dealers. Lobbyists oppose proposals that may regulate crypto without explicitly naming the sector. They say two recent, highly technical proposals could solidify the Securities and Exchange Commission, the SEC's, grasp on the U.S. crypto market, leading the industry to take another stand against what it sees as the wrong approach to government oversight. Chairman Gary Gensler has argued the SEC should be the lead regulator of the crypto world because of its role as the top cop for the U.S. securities markets. But lobbyists and lawyers for digital asset firms and their trade groups oppose a February proposal they believe may expand how the SEC defines, quote, regulated exchanges in such a way that it would encompass a wide swath of crypto platforms. In the meantime, the SEC announced another proposal that seems to follow the same pattern, potential oversight of the crypto industry without making that intention explicitly clear. For the initial rule proposal, which would reset the SEC's regulations for so-called alternative trading systems and expand the definition for what makes an exchange, the agency set a brief 30-day window that closes Monday. The crypto industry's growing Washington, D.C. contingent is arguing this February policy would be harmful overreach into interactions between people rather than just their transactions, and, as it stands, it's too opaque for crypto businesses to know where they may run afoul of the agency. Quote, "We think there's a potential threat to the industry if this rule were enacted," said Sarah Milby, a senior policy manager for the Blockchain Association in Washington, arguing the proposal is a bad policy that crypto firms see as a, quote, backdoor route to the regulation. She said the agency should be more forthright in the rules it's developing. The SEC did not respond to a request for comment. Quote, "The central question this proposal raises is whether the SEC can and should regulate platforms where buyers and sellers only talk about trading," said Bill Hughes, Senior Counsel and Director of Global Regulatory Matters at Consensus, who also criticized the way the agency seems to be approaching the industry. Hughes helped draft Consensus's comment letter on the proposal, which was published Monday. Quote, "There's no mention of crypto, blockchain, or decentralized finance in the 654 pages of the rule, but whether this proposal applies to crypto is very much an open question given how broadly it's written," Hughes said. "That sort of transparency is precisely what the federal rulemaking procedures are intended to provide." However, in recent marks, Gensler suggested that alternative trading platforms are more typically used by institutional investors, not the individuals more likely to be involved in crypto trading. Gensler said he told his staff to weigh whether investor protections, quote, on exchanges with retail investors interact should apply to crypto platforms. That's signaling he's thinking of crypto platforms as national securities exchanges, according to a recent note from law firm Sidley Austin. Whatever category the SEC eventually decides is right for digital asset firms, Gensler said it's almost certain his agency will have a say because, quote, "with so many tokens trading, the probability is quite remote that any given platform has zero securities." The second, more recent rule proposed March 28th would redefine what it means to be a securities dealer, including people and businesses using automated and algorithmic technology to execute trades. Unlike the first proposal, this one did nod toward the industry once, saying in its 36th footnote that, yes, the SEC had its eye on, quote, any digital asset that is a security. Quote, "This follows very quickly on the heels of the Alternative Trading Systems rule," Milby said, which she argued makes it seem as if the SEC is hastily trying to make regulations without fully understanding the effects and costs of those potential. Bill Hughes said he expects the industry will take the agency to court if a final version of the exchanges rule looks much the same as the proposal. Legal challenges have sometimes been successful in reversing policy efforts from the securities watchdog. Quote, These rules changes have the potential to capture a vast array of new technologies and the persons who develop and advance those technologies, said Michelle Bond, the Chief Executive Officer for the Association for Digital Assets Markets in Washington. This has the potential to chill further developments in the United States of digital asset technologies. Key Republican lawmakers have also criticized the proposed rules. Quote, "The rulemakings fail to define the SEC's statutory authority," Representative Patrick McHenry of North Carolina, the ranking Republican on the House Financial Services Committee, and Representative Bill Huizenga, a Republican from Michigan, wrote to the SEC. They argued that the regulator, quote, "fails to identify the problem that rulemakings are intended to solve, particularly as it relates to requiring certain market participants facilitating digital asset transactions to register with the SEC." A few points of note from this. The first rule, the fact that it's 654 pages in this proposal, I mean, it's shocking but not shocking. Oftentimes what regulators will do will try to cast as broad and wide of a net as possible in order to, expand their jurisdiction and their potential authority over an asset class or, a given body of proposed regulation such that they have more power and such that the scope, the breadth, and depth of their power is unencumbered. And what will happen is that through these negotiations and the rulemaking process where comments happen and then even potential litigation, the broad swath that they originally aimed to, encompass in their net ends up getting kind of chopped and whittled down. And so they ask for more than they really intend to get, with the anticipation that they probably won't get everything that they asked for, and it'll eventually get whittled down. But that's all part of this whole negotiation, rulemaking, deal-making process that they're engaging in. Next, the fact that they are going to try to redefine what it means to be a securities dealer and include people and businesses using automated and algorithmic technologies to execute trades. This is just another example of the SEC trying to expand their sphere of influence. And you can see this in Washington. There's all of these different three-letter agencies, the SEC, the FTC. They're all kind of competing with each other to expand their fiefdom, if you will, and try to get as much and as broad of a swath of the industry under their control. It's one of those things. Power, tries to expand itself and get more power. And this is just a prime example of it, and of this Washington machine acting as it traditionally does. But I think, the bright spot is that, as we see down here, the industry, certainly the industry, it's a lot larger than it was a few years ago. And it's because of that Washington and all these rulemakers and legislators are actually starting to take it seriously. But one of the effects of being so large that you're actually getting taken seriously is the fact that the industry actually has enough money to combat this. So the industry, all of the main players, have enough money to lobby for legislation in Washington to support pro-crypto candidates and to support potential litigation in the event that proposed regulation doesn't really play out in a favorable manner. So I think that, I think this is the balance to the SEC trying to put their finger on the scale in this sense and trying to cast a proposed rulemaking and a proposed set of regulations that are, I guess, what many would consider overly broad. Now, turning to our next instance of the SEC going to bat with crypto industry giants, we could see here that Decrypt reports that Coinbase chief legal officer states that the SEC exchange definition just doesn't work. Coinbase said in its comment letter that the SEC, quote, contains no such discussion of how its new exchange rule will impact DeFi. They say Coinbase chief legal officer Paul Grewal blasted the U.S. Securities and Exchange Commission, the SEC, in a Twitter thread over its proposal to update its definition of an exchange, saying the SEC is going beyond its authority. The proposal, published in January, would expand the definition of an exchange to include, quote, systems that offer the use of non-firm trading interest and communications protocols to bring together buyers and sellers of securities. So before we go on, let's take a look at this line right here and the proposed expansion of the definition of an exchange by the SEC. Quote, systems that offer the use of non-firm trading interest and communications protocols to bring together buyers and sellers of securities. I mean, to me, no matter how you read that, it seems like they're intentionally going after DeFi. I mean, non-firm trading interest in communications protocol to bring together buyers and sellers of securities. That's DeFi, but I guess, the buried lead, or, the really unresolved issue here is whether or not some of these tokens or coins are assets that are traded are actually securities. Because what if you were trading wrapped Bitcoin on DeFi? Would that be a security when the SEC has clearly stated that Bitcoin is not a security? Food for thought. Let's continue. Non-firm trading interest means a buyer or seller has indicated an asset as well as a quantity or price, leaving the rest of the details of a potential trade to be determined later. Gruhl argued that the new definition was broad enough to apply to decentralized finance platforms, but did not consider how the new rule would impact decentralized exchanges and other DeFi protocols. DeFi refers to financial tools built on a blockchain for the purposes of lending, borrowing, or banking without the need to go through third parties. Quote, despite spanning over 600 pages, the proposed rule includes the economic analysis, contains no such discussion with regard to digital assets, securities, or DEXs, Gruhl wrote in a comment letter, which Coinbase shared with Decrypt. The letter also argues that the rule could include participants in a DAO, or decentralized autonomous organizations. If that were the case, each person might need to submit SEC filings to register as an exchange. A DAO is a type of flat business structure that spreads control among participants and uses smart contracts to allocate funds. Quote, among many other challenges to applying the Commission's registration and compliance requirements to DAO token holders, Gruhl wrote in the letter, such groups of persons may not have access to information or the level of control over the DEX, the decentralized exchange, necessary to enable the DEX to satisfy such requirements. And I agree with that sentiment. When you're participating in providing liquidity in a DEX, how are you going to know who's on the other end of the trades? You're just providing liquidity. You don't really care. You're just trying to get the fee and minimize your potential for permanent loss. Let's continue. As of this writing, this letter has not yet been published on the SEC's website, which included 124 other letters and 170 form letters generated using a page set up by the DeFi Education Fund. The letters also included comments from the cryptocurrency research firm Delphi Digital, which wrote that the SEC rule change would, quote, strangle this nascent industry in its crib. Ooh, those harsh words. Strangle it in its crib. Earlier this week, Washington, D.C.-based Coin Center submitted its own comment letter arguing that the SEC's proposal would be, quote, unconstitutional. So, I think it's clear as day the SEC is definitely going after DeFi. We've seen this before. If you haven't watched some of our previous memos, we've touched on this thing called the Crenshaw DeFi memo, where the SEC produced a memo on how they intend to regulate DeFi, and pretty much their brass tacks argument was that if you think you're DeFi, you probably are, and you should come talk to us, right? So, this is definitely on their radar. They definitely want to get their hands in it, and I agree with this, harshly worded sentiment here. The SEC proposed rules would strangle the nascent industry in its crib, And so any which way that people can go against fighting back against this, I think would be worthwhile. I particularly like Coin Center's opinion on this, that the proposed rule would be unconstitutional. I'd like to see any pleadings or complaints that they file in order to bolster that particular argument and take the SEC to court with regards to the unconstitutionality claim. As it pertains to DEXs, I think that, for a liquidity provider, as I said earlier, to have the requirement for compliance to have the information of all the parties involved in a trade, that's just unpracticable. With regards to DAOs, I think it's the same thing. How are you supposed to know every other member of a DAO and then register yourself as an exchange just for participating in a DAO? It doesn't make that much sense. But this is the world we're living in, and these are the obstacles that we are presently facing as an industry. So, as they say, knowledge is half the battle. And so I think it behooves all of us that are involved and passionate in this industry to go out and make some noise and make our positions known to those that are actually in a position of power to effectuate this sort of regulatory change and do it in a common sense, practical manner. So I hope you guys like this content and got something useful out of it. If you did, please hit that like and subscribe button. We'd really appreciate it. We're going to keep you updated as this situation evolves. And with that said, thanks again for watching, and we'll see you all in the next video.